Okay, this is a simple introduction to Forex, and without much talking, we are going to go straight to what works in Forex. This is Mr. Tambari BM from Akpo's Forex Academy. Now we go. In this course, we shall go straight to the actual theories that work in Forex trading. There are a lot of theories out there that do not actually work when it comes to practical trading, but we are going to center our discussion within the things that actually work on the charts, not even talking about the theories that work on demo account and do not work on real account. Here we are discussing what works on real account trading. By this we will not beat about the bush. I am going to introduce what actually works and avoid all jargons and bunch of theories that do not actually work in trading. Forex remains the largest financial market in the world, and over $3 trillion is traded daily. Just like we said that it's the largest financial market in the world, what stops you from having a share of these financial transactions that go on every day? When you have the required skill, digital skill, you can actually have a share of this $3 trillion that is being traded on the foreign exchange market. We begin by looking at what is Forex. In a very simple term, Forex is the buying and selling of foreign currencies. Some of these currencies are paired. They are impaired. When it comes to foreign currencies, we have USD JPY, GBP USD, USD SHEV, Euro USD, GBP JPY, USD CAD, and the list continue. There are other assets that are traded on the foreign exchange market even as we speak. These are synthetic indices, and these synthetic indices are these ones here: step index, boom and crash, volatility 1, 100, 25, 50, 75, like that. A whole lot of things are traded. Gold is also traded. This is ZUSD. This gold is traded. Brent oil is also traded. BTC USD is also traded. So these are things that are traded. When it comes to pure currency, currencies are traded in pairs. Like you see here, this is United States dollar against Japanese yen, Great Britain pounds against USD dollars, USD, that is United States dollar against Swiss francs, Euro against United States dollar, Great Britain's pound against Japanese yen, United States dollar against Canadian dollar, Australian dollar against United States dollar, Euro dollar against Euro against Japanese yen, like that. The list continues. So they are traded in pairs, but when it comes to synthetic indices, they are just traded as a single asset. Like you see here, you have step index. Boom, here you are going to look at the direction of the price, whether it's going up or going down. So that's that for what is Forex. Who can trade Forex? With the advent of leverage in Forex, anybody can now trade Forex with the requisite skill. Who can trade Forex include individuals, banks, being financial institutions, and organizations. Now, before now, individuals with little capital was unable to individuals were unable to trade the foreign exchange market. But by the time a feature called leverage was introduced into the foreign exchange trading platform, it then gave an opportunity to individuals that have little capital to be able to trade the market. Leverage simply means if you have 1 naira with what is provided in the market, you can trade as though you have 100 naira. That is what the leverage feature does. So you as an individual can trade the foreign exchange market just as the banks do. Big organizations can also do the same. And as an individual, you can trade the market using the leverage that is provided on the trading platform. Where do we trade forex? Some people might ask where we actually trade forex. Forex is traded through brokers. Brokers are middlemen institutions through which forex trading is carried out. The market is so large we cannot move here to United States or Japan, to Spain, to Canada to be buying their currency, but a platform was created such that we can pass through this platform to begin to trade forex with the rest part of the world. And this platform is called MetaTrader 4 or MetaTrader 5 to be precise. It's called MT4 or MT5. MT4 or MT5 is a digital trading platform through which all traders in the world trade forex. It is a connection between the trader, broker, and the global market. Pure currency trade forex market is traded Monday to Friday. First of all, let me look at the word broker. A broker is a middleman. A broker is a middleman. Is the institution that stands between the trader, being you that is learning this today, and the global financial market. This institution called a broker, they provide a platform that gives access to so many tradable assets. These tradable assets could be pure currency, Euro USD, or other kinds of asset volatility indices, CFDs. It could also be metals like ZUSD, which is gold, and others. So the MetaTrader 4 and 5 are just a digital platform through which you and I, with secure internet connection, can begin to trade on the foreign exchange market globally without moving from where we are. You can be in your bedroom with your phone or with your laptop, your computer. You can start trading the market. Then another thing we are talking about here is that the pure currency market. Pure currency market are the Euro USD market, USD JPY market, GBP USD market, and so on. All those currency pairs, they are the pure currency market. They are open from Monday through Friday. You cannot trade them weekends because the markets are closed on Friday midnight and then open on Sunday midnight. So everything tradable is only and can only be accessed from Monday to Friday. How much trading capital do you need as an aspiring trader? Any amount could be used to trade the forex market nowadays, depending on the trader's appetite to risk and reward. Now, because of the introduction of leverage system into the trading floor or trading platform, as an individual you can use your little capital to trade the market. And normally the leverage comes in different sizes. 1:1, 1:50, 1:100, 1:500, 1:1000, 1:1.5, as the case may be. As we go into the course, we're going to let you know the actual leverage you should use. Ordinarily, $30 and above could be used as a trading capital, but some still hold the fact that it has to be $100 standard account. With my own experience, I have grown $14 to over $100, but all my trainees, I advise them the least you can start trading your foreign exchange account with is $30. But if you can afford, I also advise you can start with $100. Using the appropriate risk management strategy, a good trader can grow a very small capital to an amazing size. It doesn't matter how much you actually start trading with. What matters is your ability to use the skill, the knowledge you have acquired to grow the little capital you have started with to a reasonable size. Most people think that until you have thousands of dollars you cannot trade the foreign exchange market. No, it is not true. And anything you cannot do with small accounts, you cannot also be able to do with big account. If you are able to manage and grow a small account of $30 upward to a larger and reasonable size, then you will be able to grow a large account of thousands of dollars. Opportunities in Forex. Somebody might ask, what are the opportunities that are open to those that want to venture into Forex trading? First of all, your personal capital growth. You can multiply your capital by yourself, having gotten the skill of trading. You can multiply your own capital, and the risk of trading is very, very high. So most people think of releasing this risk to others, giving out their fund to others to trade for them. But if you know how to trade the market, you can actually grow your capital by yourself using this skill. Forex competition programs. There are a lot of programs out there that are offered by companies, brokers to traders, and they compete with certain amount of fund on a demo account. Once a trader is able to get the account raised to the required amount as set by the competition rules, then they will give a cash draw to the trader. So this and others you're going to see. So we have Forex competitions programs. Then we also have Forex proprietary firm. There are firms out there that they can test as a challenge. They can test your trading skill. Once you are able to pass the challenge, they will form an account for you to start trading, and you can begin to share in a big profit that it will be amazing to you. Fund management. If you also have knowledge of how to trade, you can manage fund, but I will not advise you to go into fund management. Think of how to double and multiply your own money, because for you to manage fund, public fund, you must have the necessary certifications, as you will be hunted for by the necessary authorities, by the regulatory authorities rather. So you should not go into fund management for anybody or investment program. Do not go into fund management for anybody. Do not go into investment program for anybody. Then robotics. Another opportunity in Forex is once you have a trading skill, that your trading skill is what we call trading strategy. You can easily robot it into a robot, into an AI, artificial intelligence program, and you can sell it. You can make people subscribe to it. They can sleep, and while they sleep, your robot trade on their money and they pay you monthly. That is another field in this industry. Now, forex training, haven't gotten the forex skill. You can also train others, charge them an agreed amount, and you train them for a living. You can do that just as I'm doing now, but this training is free and it will continue to be free. Forex signal provision, once you know how to analyze the market, you can provide signal. You can send a quote, a kind of signal of when to buy, when to sell a particular asset, when to enter, when to exit, the risk management involved. You can provide such services, and at last people will subscribe to your signal program. Then forex broker bonus. There's what we call forex broker bonus. If you want to deposit, some brokers will give you bonus for depositing your fund with them and trading with them. Some can go as far as $100 deposit. 100% deposits bonus. So that if you deposit $10, you get $20. If you deposit $50, you get $100. But there are always T and C applied to it. That is terms and condition. How to trade forex? Now, the forex can be traded in any of the following three ways based on the type of analysis employed in determining direction of price of an asset traded. The foreign exchange market could be traded using three major ways. The first way is by fundamental way, by technical way, and by sentimental way. First of all, what is fundamental way or fundamental trading? Is the use of economic news and speeches to try to determine the direction of price of an asset. When you are using economic news, the news of an economy, the news of a government, the news of a product of a company, and the speeches made by prominent people to trade the foreign exchange market, then you are a fundamental trader, and as such you are rely on fundamental analysis to trade the market. The second one, you could also use the technical analysis to trade the market. This is the usage of the history and asset behavior by using the Forex charts. This is also called price action. You use trend lines and key levels to determine the technical analysis, to carry out the technical analysis. We are going to go into that during the practical session, but in this very tutorial I'm still going to talk about the technical, because this technical is where we are going to base our trading. That is what we are going to be using to trade the market. Then finally, the sentimental approach to forex market trading. This one is just like betting and gaming, using that mentality. Some people, they just guess that price will go up, price will go down, but it is not what I would advise any aspiring trader to go into. So the very way we are going to use to trade the forex exchange, the foreign exchange market, is the technical approach. So you are going to be a technical analyst. We are going to utilize the history and behavior of the tradable asset to try to look at the future of it, what is going to do whether the price of it will go up or go down. We are going to be using technical method in trading the forex market only. So let us sink into your head that we are going to use only technical approach. Now let us look at technical analysis. Is the use of the forex chart history and the movement of price to determine the future direction of price of an asset. An asset could be USD, Euro, CAD, JPY, GBP. USD is United States dollar, Euro is Euro, CAD is Canadian dollar, JPY is Japanese yen, GBP is Great Britain pounds, and etc. There are other pairs that you can also find out by yourself when we go into the course proper. We are going to use key price levels and trend lines. We are going to be able to determine the future direction of price of an asset using this. When we talk about trend lines, it's something like this that connect two tops or two descending tops. This is what we call trend line, this line, this black line. Then this is what we call key levels. You see this white numbers written in a red background. These are key levels. The 00 levels. This 00 level here is supposed to be 002. Maybe a mistake was made here, but 00 levels are the key levels. So the technical analysis, we are going to utilize the chart history. When we go into that, I'm going to show you how to use technical analysis to try to know the direction of price in the future, because normally the foreign exchange market is influenced by human behavior. So what happened in years past can still happen now. Based on that, we can also find out what can happen in the future to come. So we know that things repeat itself on the foreign exchange market. Human behaviors tend to repeat itself on the foreign exchange market on the chart. This chart you are seeing here, this is what we call candle chart. It tends to go up and down, and this down and up movement is the movement of the price of these assets. So we're going to use the technical analysis to determine the direction of the price of an asset by utilizing trend line and key levels. When we get to that, you are going to see how it is carried out. Currency pairs traded in Forex. The following and many others are the currency pairs traded in the foreign exchange market: Euro USD, Euro United States dollar, GBP USD, Great Britain pounds, United States dollar, United States dollar versus JPY, that is Japanese yen, United States dollar versus Canadian dollar, Great Britain pounds versus Japanese yen, Chef JPY, Swiss francs versus Japanese yen, and Euro versus Canadian dollar, and many others. So there are many pairs of currencies that are traded. But one thing is sure that you have to know: the first currency is called base currency, while the second is called the quote currency. Just as it's here, this euro is the base currency, while USD is the quote currency. The risk management involved in trading has to do with the following majorly: the lot size. This lot size, The percentage of a trader's capital that is used to buy and sell in the forex market is what we call lot size. Supposing you have 100 naira and you are going to buy a currency in the market. You decide that you are going to use 10 naira to buy that currency, so that 90 naira will remain. Then you are using 10% of your total fund, which is 100 naira, and that 10% is 10 naira. So the lot size talks about the percentage of your total capital that you are using to expose to the market. That is what you are ready to risk. Then stop loss is the amount of percentage of a trader's capital that will be lost if the analyzed direction of the price fails. Normally, when you analyze that price is going to go up on assets, it can happen that price will not go up, it will go down. At such time, you see that there is a point that we said that if price goes against us, that is against our direction, which we have analyzed, let it get to so point and stop. That is the stop loss point. We are going to show you that on the chart when we begin for the trading proper. So the stop loss is the amount that the trader will lose if the analysis fails. But this stop loss point must have been set by the trader. Most people do not set stop loss when they trade, which is just unacceptable, and I will not advise any trader to trade without setting stop loss, because that is how people blow their whole account and their account is liquidated within few minutes or hours or days. Then they start to cry that Forex is a scam. It's not a scam. Because of greed, they went about thinking that what they have analyzed cannot go. So I want to just let you know at this point that nobody knows it all in forex trading, and nobody is a professional to the point that you cannot also incur losses. But what we do is to manage the risks involved in trading, such that let it be that out of the gains you made, the losses, by the time you remove the losses, you still make profit. So there's nobody that do not lose in forex, and there are no people that do not also gain in forex. But what we do is to ensure that you stay profitable consistently, so that even though you are going to lose, you do not lose your capital, you do not also lose the whole profit, to avoid your account being blown or depleted. Then the other item under risk management is risk reward ratio. The risk reward ratio is the amount of fund to lose, is the amount of fund to loss to the amount of fund to gain on a position. Let me explain this. The amount of fund to lose to the amount of fund to gain on a position. Position means an active trading asset yet to close in profit or loss. Here is a bit technical, but when we go into the practical, you're going to understand. There are always 3 points in every trade: the entry point, the exit point, and the risk management point being the stop loss point. So when we get there, you're going to understand this. But I would advise that you go through this video 3 times. Go through it as many times as possible to ensure that you sink the understanding of all this into your mind and your head properly. During a practical session, you will be told the actual measurement used for risk management. There are some attitude of losing traders. The following are some attitudes of losing forex traders that help him or her lose while trading. So if you portray this attitude, you will lose and lose and lose and lose very, very well. Impatience. So trading will help you to be emotionally wise. This is what we call emotional intelligence. To be able to control your emotion so that you will not be, because of impatience, begin to do what you are not supposed to do. You trade within the principle of trade. Every trading has a principle, and this principle is guided by the trading strategy. So you stick to the rules of trading. Do not just because you are saying something, you start to move. You start to enter a trade. You don't allow price to move you. You rather enter a trade based on the trading rule as given to you by your trading setup, which is the trading strategy we are going to show to you in other sessions. Greediness can also make some people to lose. When you are greedy, you want to make it all, you can lose everything. So you have to take care of that as a trader, as an aspiring trader. Everybody needs money, but when you come to a trading market like Forex, it's like a big ocean where if you have taken a little for the day, you stick to your plan and go out, because there's nobody that cannot lose in this market. But what makes us profitable is that we trade our trading plan and also stick to our trading rules. Lack of other emotional intelligence, fear and hastiness. Like a friend of mine that I taught Forex has always been losing because of fear. When he's profiting, he will be afraid that the trade might turn against him, so he will close out of a profitable trade, and at last he will see the price go still in his direction. Then he will start to regret why he closed, but he closed the trade out of fear. So in this, you don't have to be fearful, you don't have to be hasty. With appropriate risk management in place, you should not entertain fear. Early entry of good trades. Sometimes you do not want to wait for the setup to trigger. You're going to understand what I mean by setup. Setup is just the trading strategy that is guided by the rules of trading. You allow all the confluences to trigger before you can enter a trade. You don't enter prematurely. You don't enter too early or too late. You enter when it is the right time for you to enter. You are going to understand this when we go into the practical charts. Overstacking of trades. Some people open 2, 3, 4 positions at a time. I will advise you to open one position at a time. You are going to understand this. We are not those who trade and stack positions. You open one trade, open 2 trade, open 10 trade, because you need money, as though it's a get rich quick program. Unconsciousness. Some persons are unconscious. Because of their unconsciousness, they are not focused on what they are doing, they are not disciplined, they begin to also lose trade. Lack of goal and plan. Every good trader must always have a goal and a plan, what you have set before yourself to achieve within a certain point in time, within a duration. So once you have achieved that on daily basis, you will close out of the market. You don't chase price or chase the market until you make everything one day. If you do so, then you are trading out of plan. Another thing is get rich quick mentality. Most people think that Forex is a get rich quick program. No, if you come into trading with such mentality, certainly you'll be a loser. So remove the mentality of get rich quick, because anything that will be good must have to take time. Think of building your skill first, how to analyze the market. By the time we go in, give attention to it, understand it, you practice it on demo before you go to live as accounts. Thank you so much. Wishing you a successful trading life. This is powered by Akpo's Forex Academy. The lead trainer is Mr. Tambari BM. Our telephone number, you can contact us for more inquiry, is 0816534457, and you can reach me through the email ID tambariakpo@gmail.com. Thank you and God bless you.